Whenever people reach out to us and ask us, what is the best way to arrange your investment portfolio? And the answer from us is always simple. The best way to arrange your investment portfolio is to arrange it as if you're creating a football team. That is, you have the defenders, the midfielders, and the attackers. Now, the defenders are the government bonds, those fixed income assets. Now, the midfielders are the ones that pay revenue or that pay dividends, maybe long-term dividends or short-term dividends, but the strikers are the growth assets. So you must arrange your portfolio to include all this. So today we'll be discussing growth asset, like 5 stocks, growth stocks you can add to your portfolio today for your portfolio to be well structured. Now, my name is Providence and this is Clockwise. And like I do it often with a resounding virtual round of applause, please welcome my guest. Welcome, Mr. Kandem. Welcome to Clockwise.
Thank you.
The market is already down, so there's no need asking you how is the market. How down is the market? I think that's the best question.
The market is down.
Very down.
Very, very down. I know of a lot of investors, especially momentum investors momentum traders that are down double digits in their portfolios.
How down can it go again?
So the interesting thing is that anybody who followed this channel should not be so down.
Yeah.
Because we had predicted this long before we entered June, that June will be a down month.
Yes.
And we even gave reasons why June would have to be a down month. Yes, people are saying it. I know that Dangote, the private placement by Dangote affected. But I mean, that has been concluded. So the reality is that investors are taking profits. Beyond just the private placement, people want to be part of what is coming. That's number one. Number two, and I mentioned this in the last podcast, as far as the fixed income market remains attractive,
and very beautiful,
investors will always
move the money,
rotate from equities to fixed income, because fixed income is literally zero risk. Nobody will want to take the pains or the uncertainty of the equity market when fixed income is paying very well.
Okay.
And the point is, do I see the fixed income market tumbling anytime soon? I don't think so. Because what actually moves the fixed income market is interest rates. So CBN fixes the MPR. The MPR determines to a large extent, most especially the short end of the curve, which affects the bond market. And the bond market is actually what sets.
So are you trying to say that we are not seeing respite for any moment from now?
We are going to see respite, definitely. And I told you even in the last podcast, what are the triggers that we're expecting? Number one, from 3rd week of July, we're going to have earnings calls. Some of these companies still have very strong fundamentals.
Okay.
And I remember when I mentioned, I think we did that podcast in the month of April, and I predicted exactly, I said, that I'm actually going to sit on some decent cash. And the reason is because I expect that investors will rotate out of some of the momentum names to pull funds together for the Dangote refinery. So I believe that that market dislocation is because people are trying, apart from what is happening in the bond market, in the fixed income market, I think people are actually positioning themselves to allocate to the Dangote.
Now, from what you are saying, from this indices and the happenings in the stock market, don't you think that when Dangote refinery is finally listed, it will be overpriced?
Not necessarily,
because there's a lot of cash waiting for it.
No, not how much is waiting for it. So here is the deal. Not necessarily, because Dangote is looking for $5 billion.
He has already had more than $2 billion.
He had $2 billion. I think this private placement should even maybe make another $1 or $2 billion. We still have $1 billion to go. You know, and that is somewhere in the neighborhood of 1.4 trillion naira. The retail investors that are coming in, maybe they could make up to that, but it might not be that explosively or outsized gains in terms of valuation upon listing. But my point is, I want investors to take advantage of the dislocation. As for me, I see people sending messages to me, the DMs and all of that, and say, the market, you guys didn't tell me that this is how the market is. For an experienced investor, this is simply just a healthy correction. It's a very healthy correction. We ran up to 61%, nearly 62%. That is even more than what the entire FY 2025 did as far as the all-share index is concerned. So, if the market moves, you need some breathe. You need to breathe. You need correction. And we already said it before. We advised our followers, take profits. Take profits. So that's what investors are doing. They're taking profits. So I expect a turnaround to happen around towards September. And there are reasons why. Number one, apart from the Dangote listing that will bring a lot of enthusiasm back to the market, remember that on the 21st of September, the Nigeria will be back onto the FTSE Frontier or Russell Frontier Market Index. So that means that would eventually attract foreign interest into the Nigerian market. If we still have FX stability, which I see we still have, we've been rotating from, I think, 1,360 to maybe 1,410, which is it's not such a large draft, if you ask me. So if we have FX stability, if the bond market, breathes a little bit, and then institutional investors show up, then you will have a lot of recovery in the market. Apart from that, after the Dangote listing, I expect that some of those areas, institutional investors will begin to look back at the areas where they took out their funds.
I will not forget that you've already emphasized that the best time to actually buy stocks is during period like this.
Yes.
And the last time you said something that kept me thinking throughout the week. You were saying that the stocks they are the only commodities where people don't buy when it's at the sale price.
When it's on sale, yes.
People have been complaining, when is Aradel coming down? When is this coming down? All the stocks are down now. People are not still buying.
that is actually human nature. Aradel was trading at 2,109 naira per share. Now it's trading at 1,400. You can imagine. You can imagine, but the same people that were looking for it just to come down are not buying at this time. Now, you might think that Aradel is it that Aradel has lost its fundamentals? It's not true. The only thing the cost of production was high in the last report, but Aradel has not lost it. So the thing is, investors should look at. I look at some of the things. Some of the things I look at: earnings power, cash for operational cash flow, balance sheet, and then dividend payments. These are some of the drivers. These are some of the things that create very strong tailwinds for stocks. So as we are looking for stocks that will perform well in this downturn, because I believe that, and I'm doing that the same, you will not believe that I'm still buying. By the way, I'm not buying, like you said something, you said people that said that the stock market is, record what I said, that the stock market is the only asset, or the stocks are the only asset when people are fearful of buying when it's on sale. How do you overcome that fear? It's simple, by putting limit tolerance. And that's
we finally agree that the stock market is majorly controlled by emotions.
Yes.
Because
especially among the
retail traders.
Retail investors look at the stock market.
We know that institutional buyers are still buying.
But I told you before we got to the show, someone at the peak of the market bought in, and she's down very huge. She
bought at the top.
Is
it selling now?
No. She's panicking. I literally told her, if you cannot do it, uninstall your Bamboo app.
Honestly, that's a very nice.
Yes, uninstall your Bamboo app.
I think I'm not looking at my Bamboo for like 1 week now.
I can afford to look at it because it's something I'm very used to.
Yeah.
I'm used to. If you were in Nigeria, in the Nigerian stock market in 2022, this is child's play. We are still up. If you look at the all-share index, we are still up. We are just for which one is for 47%, we're still up 47%, even with the correction in the past.
It's not a very down.
So it's not a
All
very
right,
down.
now let's look at those stocks that the last time we were here, we looked at some stocks that were undervalued. And now let's look at those growth stocks. You know, growth stocks are long-term stocks. Stocks that even if you're investing now, you know you're not expecting any change for the next 3-4 months. It's a long-term stock. So first of all, let's establish what a growth stock is for those that are joining us now.
Okay, so a growth stock, like I said, I had mentioned some things. Growth stocks are stocks that have very, very strong growth potentials.
Okay.
Yes. And what drives growth? Free cash flow or operational cash flow. You have rock solid balance sheet. You have companies that have very high earnings power. Okay. Those are companies that are growth stock because they can afford to multiply return on equity at a pace that other stocks cannot do. So in that regard, my number one growth stock would be, for this show, would be GTCO. I'm saying this because GTCO is by far, in terms of, I consider this in terms of liquidity. Yeah. You know, how easy can institutional investors come in and exit? Because if you observe, I mean, anybody that has been in this market for at least 5 years knows that whenever the market turns around, it is the most liquid stocks that lead the rally. Okay. So I think GTCO sits very comfortably there because it has subsidiaries that are helping the company to earn in foreign currency, which allows them to be a little bit less immune or more immune to the FX volatility. Now, but beyond that, digital platforms, I mean, it's about the only banks that, in terms of access to FX, GT is there. As a matter of fact, I even went to do some transaction. I was told that GT is the only bank that really has dollar cash to give. So GT Bank is very, very strongly positioned. So and it's also very, very liquid, very liquid. If you check your Bamboo app, as a matter of fact, you would see that GT is at 5/5 in terms of liquidity. GT is 5/5. I think the other one is, Zenith is 4/5. At the time, Access was 5/5. Access have been 5/5 for some time now.
I know that.
So those liquid stocks are the ones that institutional investors are coming into. Remember, what we are looking at as tailwinds for the market recovery is actually the influx of institutional players. Institutional players are almost entirely looking at getting positioned in Dangote at this point. Private placement and even having some allocations to be able to allocate. Remember also that institutional, because Dangote is going to be almost 50%, if not more, of the market. If you are tracking the NGX, that means 50% of your portfolio has to be in Dangote refinery. It's that simple. So for you to be able to get this allocation, you have to sell off some stocks. Currently it is not listed, so a lot of institutional investors, especially fund managers that are tracking indices, are still overweighted in other equities. Once Dangote lands, then if you are still going to track the NGX as you want to, or especially the all share index, then you have to ensure that you are very, very much, very overweight. Disproportionately, if you ask me, overweight Dangote, because you want to achieve the 50% exposure that Dangote gives, that the stock market has to Dangote stock. So that is why that one is there. So really, GTCO, forget about the fact that it's down 21.96% from all-time highs.
But that's better for investors.
So that for me is better for investors. It is a good point that I would want to begin to. If you have not allocated, then you start allocating at this time. I mean, everybody looks at over 20% correction. And I think it's a good place to enter. But I still have, because I'm not just fundamental, I also look at technicals. I still have, based on the charts, there's a price point. I'm actually looking at it as low as 95 naira. As a matter of fact, it's currently at 123 naira. But when you look at the charts, you know that there is an incentive for it to get down there. we expect we are already in the month of July, so we expect earnings call in the next 2-3 weeks.
Yeah.
So if those numbers are strong, that's why I'm saying don't wait until that when I'm putting that 95 naira. You can start allocating now, because sometimes if there's a blowout for GT in terms of earnings, then the market could reverse. Summer is usually a month where people literally don't do so much in the market. And also remember that in this month of July, investors are doing they are checked out for the first half of the year, so they are doing some kind of rebalancing for the next half of the year. So that's why you should consider all of these things. So GT1 is one. The next one, of course, is Zenith.
Okay.
Zenith, because number one, if you observe these two are in the financials. Financials, the financials are literally the most liquid part of the Nigerian stock market, as a matter of fact. So Zenith is, when you talk about balance sheet discipline, Zenith is number one. So that in itself, in fact, Zenith was before, a lot of investors look at Zenith as a dividend play. No, with the kind of returns on equity that Zenith has done in the past, Zenith for me has moved into a growth name. So Zenith can actually occupy both your dividend stock portfolio as well as your growth stock portfolio.
Can GT also do that?
GT can also do that. I mean, we are going to hear interim dividends, I believe, in the next 3 weeks. Okay. I think it's only GT and Zenith actually.
FCMB did that yesterday.
Yes, but I mean, SMB is not a tier 1 bank.
Yeah, I know.
You know, and if you observe, especially institutional investors, their first target is tier 1 bank before they trickle down. So Zenith Bank for me is also a strong name, a growth name that you'll be looking at. Zenith Bank has done 19.1% decline from its all-time high, all the way from 137 to now trading at 110. So that for me is a decent pullback. That's literally almost 20% pullback that you should start allocating to.
Okay.
Now, I know that for that GTCO, why am I thinking that it will still come down? I don't know whether investors, I still don't believe that investors are fully priced in what will happen with this holdco. Yeah. Okay. We don't know yet. I still don't believe.
We're still waiting for
ninth. You know, but so for me, I still believe there might be some more downside to GTCO, and that's why I'm still setting limit orders down there. But at the same time, I will not tell anybody to go to try to time the market. Time in the market will always beat timing the market. The next one is I move away from financials. I go into communications. MTN has come down very significantly. When it came down from 910 to the 700s, people lost their minds.
Yeah.
But experienced investors are happy.
And they want to even come more down.
Yes. If it comes down more, I mean, there are some assets I see very strong potentials in the market. I don't buy them, not because they are not strong. They're not because their fundamentals are not strong, not because they don't have tailwinds, but because I believe I can get a better price for them. So at this time that when the market is literally on sale, you should be going out and buying names. Yeah. You know, except you had, contrary to what we really recommend on this channel, you had gone out to dump everything when it was at all-time highs.
We don't
We
advise that.
always say almost every video we say dollar cost average. Yeah. And so that you have dry powder. Now that the market is down, you buy it, and that now brings your average to something more decent. Okay. So MTN for me is a strong name. I mean, with data, voice, you have a lot of people, content creators are all over the place. In fact, the word sub for me is now a cliche.
It's not an SEO word.
I'm telling you, it's not an SEO word. So sub for me is now something that everybody, or almost literally everybody does. So I think that MTN is going to benefit disproportionately when the market recovers. So don't look at the current downturn as something that you should be scared of. The next one, I go to food. I go to consumables, consumer staples. I'm going to talk about Boa Foods. Boa Foods is a strong name, though it's still up there. Yeah, but Boa Foods is a strong name. They benefit from sugar, from flour. I was even looking whether they actually still benefit from things like kuli kuli, like corn, like akara. And I just realized they don't do all of those things. And I maybe they don't know that the business is moving. You know, the akara business is moving, so they should try and get themselves into the akara business and kuli kuli, and then of course, corn. I mean, for them, they use corn for other things. They don't use it. They don't know that roasted corn is now a move. Is that a business that moves? Anyway, so the thing is that Boa Foods has a very strong pricing power, and they do what we call backward integration. I think we've talked about this on this show before. So for me, they are very strong growth potential. Consumer staples are, for me, they bestride growth and defensives.
Okay.
The earnings power and Boa's ability to pass on inflation to consumers is, for me, why it's a growth story. But the fact that it is a consumer staple is a reason why I consider it defensive.
Okay.
Because defensives are, I mean, no matter how expensive salt is, will you eat food without salt? No matter how cheap salt is, will you eat more salt than you should? So that's exactly the point. People will always eat. So that's why it's defensive. That's why, if you observe, during downturns, most consumer staples are the least. Utilities, consumer staples are the least affected.
Okay.
In downdraft, in drawdowns, like the economic downturns like this. So Boa Foods is also there. I think we should consider it. I can't get the exact technicals actually at this point because it is still up there. That is the same challenge I'm having with my final name. I would have gone for Seplat because Seplat is for me such an insane growth story, especially in the energy space. By the way, some people are saying the oil price is down. Well, but guess what? I mean, I've worked there before. I've worked in ExxonMobil before it became Seplat before, and I can tell you something. Sometimes the revenue from gas outshines what they have. What they have from oil and gas, from oil itself. So, but the name I'm going to mention here will not be Seplat, rather it will be Aradel. I know people will kill me for mentioning Aradel, but look at it. Aradel is still a very strong name.
Aradel is competing with Access Bank.
In terms of, you are trying to
instead of going down.
Listen, when a strong name goes down, we call experienced market participant, call it market dislocation. That is like a Black Friday for investors. So I
like that term, a Black Friday.
Black Friday for investors. So please, as you're considering, don't look at Aradel. The thing is, Aradel is trading at less than 10 times forward earnings. Less than 10 times forward earnings. If you compare that to other names, its colleagues, I mean, you know that it's actually still very cheap. Now, I know the reason why people dumped is because of the very paltry dividend that we're looking at. But like I said, we are talking about growth stocks here. Aradel for me still remains a growth stock. At this point, 1,400, I would still say it's a buy for me. In the next few months or thereabout, we would see that would have been the very smart decision that you would have made. There are two big names in energy: Seplat, Aradel. Aradel has corrected to a position where I believe that by second quarter earnings, Aradel's price to earnings ratio would have even collapsed to 7 or 8 times earnings. And that's very cheap.
Now, before we go, I'd like you to tell us how you would have allocated your resources to these 5 companies you've listed.
Okay. So I would personally, I would have allocated for the banking space, Zenith and G2Co. I would have done 40%.
Okay.
Then I have 60% left. I have MTN. I would have done MTN 15%.
Okay.
That's 65%.
Wow.
Then Boa, I would have done more for Boa. And the reason is because 65% is gone. I have 35% left. I would have done 20% for Boa. Why? Because Boa also, for me, is It's not just a growth name, it's also a defensive name.
Okay.
Good. Then the rest 15 I would, the rest 15 I would put in R.
All right, now we'll still keep our eyes on these stocks and see how they move. Thank you for coming.
You're welcome.
You've done justice. Now, like my guest said, you see, November is usually Black Fridays for some commodity, but we have discovered that June is always Black Friday for Nigerian stock. So there's an opportunity for you to buy if you really want to buy, because millionaires actually made in the stock market in the bear market. Now, this is our show for today, and thank you for staying to this point. Please do not forget to like, subscribe, and also put a notification bell on this channel. If you want to get to our community, we have a link on our profile where you can actually take you straight to our Telegram community. Please keep watching, and as we also keep watching the movement of the market. My name is Providence. I'll see you again.